We are live. Hi, everyone. We have another webinar for you today. Today, we have Jen and the Paychex team talking about federal compliance updates and the new 2020 W-4 form. How are you doing, Jen?
Doing well. How are you, Albert?
Yeah, no, everything's great here on the West Coast, and you're Rochester, right on the East Coast.
We are. It's nice and it's fall weather here. It's like in the 60s and kind of gloomy, but not too bad.
Oh, yeah, it hasn't gotten freezing cold yet.
Not freezing, no snow. So
Awesome. You want to talk a little bit about yourself, Jen, and Paychex and what you do, and introduce our speakers?
Sure. Yeah. Thank you. Thank you for having me and the team today. I'm Jen Atho. I am the multicultural marketing manager for Paychex. I oversee all of the work that we do with the Hispanic community and Hispanic small businesses and our partners, specifically LTPA, as one of our best partnerships that we work with in this community. We love working with you guys and providing valued content to your members. As far as Paychex is concerned, we're proud to be able to sponsor this particular webinar as well as others in the past and more to come in the future. Paychex is a recognized leader in the payroll, human resource, and benefits outsourcing industry with a steadfast commitment to success and a record of achievement that continues a tradition of delivering excellence. We were founded in 1971, and we now have more than 13,000 employees serving more than 500,000 small to medium-sized businesses across the nation. We offer an ever-growing suite of payroll and human resource products and services that help clients do what they do best, which is to run their business. So part of what we're going to talk about today is how we make that easier for small businesses to focus on what they need to do for their own business and take some of the burden of compliance off of them and the ever-changing rules in the compliance space. Before we get started, though, I have to give a couple of disclaimers, just a few housekeeping items here. The information in these materials and that provided by the presenters should not be considered legal, accounting, or investment advice. It should not substitute for legal, accounting, or other professional advice where the facts and circumstances warrant. It is provided for informational purposes only. If you require legal or accounting advice, or if you need other professional assistance, you should always consult your attorney, accountant, or other professional advisor to discuss your particular facts, circumstances, and business needs. So now that we have that housekeeping item out of the way, it's my pleasure to introduce our speakers for today. We have two incredibly knowledgeable speakers joining us to speak on these topics. Andrew Gargana is a senior federal compliance analyst within our compliance risk management here at Paychex, which, as Albert mentioned, we are based in Rochester, New York. He leads the federal payroll tax compliance activities of the company, which serves in all 50 states. The federal compliance analysts monitor all legislation and function as liaison with the company's product management and development divisions to ensure regulatory matters affecting the firm's payroll processing and tax filing platforms are implemented. We also have Bill Goslin. He is an analyst in the payroll tax compliance group within risk management, again, here at Paychex. Bill and his team are responsible for maintaining relationships with the federal, state, and local agencies for payroll and tax filing matters to ensure that all payroll tax compliance requirements are adequately incorporated into our system and into our operational processes. Bill is currently the lead liaison between the U.S. government tax agencies and Paychex, where he helps the company and its clients maintain compliance with federal payroll tax laws. Both Andrew and Bill have been with Paychex for 21 years, which is just a wealth of knowledge, and I'm excited to hear what they have to say. They're obviously both very knowledgeable on this topic. So with that, I'm going to turn it over to Andrew to get us started.
Thanks, Jen. Hi, everyone. As Albert said, we're going to be discussing the federal W-4 for the majority of this. But before we get to that, I wanted to go back and just describe how we got here with the W-4 and the changes. As most of you know by now, passed in late 2017 was the Tax Cuts and Jobs Act, or as we call it, tax reform. We started to see the impacts in 2018. And that's what led to us, or led the federal government to make a change to the W-4. In addition to the W-4, there's a couple other things which you or your clients will be directly impacted. One of the big ones, which is still in the news today, is the capping of the SALT deduction. SALT is the state and local taxes. Before the Tax Cuts and Jobs Act took effect, a taxpayer on their personal return could deduct all of their state and local taxes. When this law went into effect, that amount was capped at $10,000. If you're lucky enough, like we are, to live in a high-tax state like New York, this did have quite an adverse impact on taxpayers. This led to the governments of not only New York, New Jersey, I believe California as well, Connecticut, any of the higher tax states to look for creative ways around this law. A few of the things that they thought up was they came out with new regulations where you could try and make deductions to a charitable organization, and that would give you a corresponding tax credit. You could itemize that on your return that you filed with the state, and that would help kind of offset some of the state and local taxes that you couldn't claim on your federal return. In addition, New York State implemented an optional payroll tax. This really didn't take off. It started January 1st of 2019 and didn't really get off the ground. There's been very low participation in it. Connecticut's exploring a similar concept. As we learned of all of these, we waited for the inevitable, which was the IRS would address these and try and shut down any ways that the states were coming up with to get around these. And as we knew what happened, they came out with regulations. The charitable contributions were no longer allowed for the state. And as a result, a lot of these states are filing lawsuits against the federal government trying to get these overturned. Right now, they're still working their way through the courts, so it's going to be a little while anyways before anything happens with those. But just wanted to bring that up as color background for the Tax Cuts and Jobs Act. The other big change, which I know everyone's waiting for, is the change to the W-4. IRS began working on this back in 2018. We were lucky enough to be part of the discussions early on, along with several other groups. Just providing feedback, IRS would show us what they were thinking and then try to get feedback from us, not only us, but other taxpayers. They took all those comments, tried to come up with a form to make the change in 2019. However, they couldn't make it work, so they delayed that until 2020. And that brings us to the new federal W-4 form, which I'm going to show you in a minute. In case you haven't seen it, the current draft IRS released on August 8th. Now, it says it's a draft, but IRS has pretty much said, barring some major miracle, this is going to be the form they're going to go with. They wanted to get it out as early as possible so that payroll companies and businesses would have time to get those programmed in their systems so they would be ready to go for 2020. You can go out and look at the document itself. We're going to show you the form W-4, which they did rename. It's called Employees Withholding Certificate. We're just going to show you the form itself. There are instructions that go with it, and there are also several worksheets that employees can use. We're not going to delve too much into those. We're focused mainly on the form itself. Before I show you that, there's one other thing that we're going to want everyone to do. IRS has been pushing this a lot, and you're going to want to do it yourself. You're going to want to encourage your clients to have all their employees do it, and that is to do a paycheck checkup. IRS has a tool on their website called the Tax Withholding Estimator. You're going to want to encourage every employee to go out there, do the checkup. It'll tell them what they're withholding currently, what they should be withholding. They're going to take all their information and try and provide the correct amount for withholding. The IRS's goal in doing all this is they want to get taxpayers to be at a zero balance at the end of the year, which means their withholding is exactly equal to what it should be. So they wouldn't get a refund, they wouldn't owe. I know in my own personal case, I like getting a refund. I know a lot of people are like that. So that's going to be your own personal preference. But just so you know where IRS was coming when they developed this, That was their direction, is they wanted to get everyone to be at an exact zero. Their withholding would be perfectly equal to what it should have been. Again, go out, use the tax withholding estimator, see what you should be withholding, and that'll help you complete the new W-4. Without further ado, there it is. I just want to mention a couple things, then I'm going to turn over to Bill, who's actually going to break this down section by section, tell you what some of the changes are, and what you need to know for each section. One of the key things to mention is, although this form is out there and it's going to be used in 2020, it is not mandatory. All employees should have a W-4 on file currently. If you do not have to change. IRS is not mandating that an employee complete this. If you like your withholding now, you can go with that. Say you go out, you do the tax withholding estimator, you like the amounts it gives you, you don't want to make a change, you don't have to. They did provide this form. It's going to be required only for new employees beginning January 1st, 2020. Any new employee or any existing employee that wants to make a change, they have to use this 2020 form. The 2019 and earlier forms W-4 are not going to be valid any longer. And then the one other caveat is, because you can keep your existing form, if you filled it out in 2019 or any time in the past 30 years before that, because you can keep that withholding, it's going to be a little bit of a burden on payroll companies and employers, because you're going to have to maintain two separate withholding systems. You're going to have to keep the current one, and then you're going to have to be able to account for the 2020 version. And to go over some of the differences, I'm going to turn it over to Bill, and he's going to discuss more in depth the new W-4.
Thanks, Andy. Appreciate it. So as Andy mentioned, basically I'm going to go through the new W-4 for 2020 is broken down into 5 separate steps. We're just going to kind of go through each individual step and kind of highlight some of the major points or differences from previous versions of the W-4. So the first section is step 1. This is where an employee would enter their personal information, name, address, and filing status. It's pretty self-explanatory. The biggest change, I should say the only change in this section from previous versions is the IRS did make a change to section C of step 1 for filing status. If you may recall that previous versions, you could either check that you wanted to file as single, married, or married but withhold at the single rate. The change that they've made, and this is to fall more in line with the changes that resulted from the Tax Cuts and Jobs Act, and to go along with how the IRS has set up the withholding tables since then, you will either check single or married filing separately, married filing jointly, or head of household. So though that's, like I said, for step 1, it's pretty self-explanatory, but that was the biggest change, was to section C of step 1. So we'll move on to step 2, and this is actually a brand new section. Looks completely different from existing versions of the W-4, and this is again all part of resulting from the changes from the Tax Cuts and Jobs Act. So the revised W-4 for 2020 is now going to have the functionality to account for an increase in your income if you have multiple jobs. Your tax rates increase, obviously, as your income rises, and with only one standard deduction allowed to be claimed, this would make it easier and get your withholding more accurate if you can account for your multiple jobs and other incomes. So this addition provides the ability to count for more than one job at a time, or if you are married filing jointly and both you and your spouse work, you can account for that and will get more money, usually withheld from the combined pay for all the jobs that are within your household. It's important to note that this has been true for many years. It didn't really change except for the old form accounted for multiple jobs using detailed instructions and worksheets that weren't forward-facing. So unless an individual really bothered to look past the original certificate into the actual worksheets that followed, often they never accounted for that. So again, this puts it more forward-facing, and hopefully people can account better for their additional sources of income with multiple jobs. So we'll move on to Section 3. Step 3 is for dependents. So basically this was created since tax credits are claimed on your individual return at the end of the year. Step 3 of the revised W-4 allows you to take dependent credits into account now when you're actually setting up your withholding. In the past, you didn't have the ability to necessarily account for those. But again, this is all part of trying to get as close to perfect withholding as possible. So we'll move on to Section 4. Section 4 is for other adjustments. So this new version of the W-4 will allow for an individual to account for any other adjustments that are not related to payroll, but do affect your income. Some examples could be, if you have interest payments, retirement income, or maybe you're receiving some sort of dividend payment, anything like that, it's still going to increase your income, and so definitely will affect what you owe in taxes at the end of the year. So again, it just gives the ability for people to account for those. Some other types of adjustments could be, student loan interest, IRAs. Again, it's just a way to try to get closer to the more accurate withholding as possible. The amount should be determined through completion of worksheets. So again, with the new W-4, and as Andy had mentioned earlier, we're simply just showing you the W-4 certificate itself. There are additional components to this with instructions and worksheets. And those worksheets that follow the W-4 will help people determine how to properly complete these sections of the W-4. Again, just trying to get as close as possible to the perfect withholding on that. So then we'll move to Section 5. And again, Section 5 should be very self-explanatory. This is just where the individual signs and dates it, and then the employer fills out the employer section, and then this goes on file for the employer to keep for their records. So in conjunction with the release of the new W-4, the IRS basically decided they've created a new publication. It's going to be Publication 15T. And so this Publication 15T is going to contain the federal income tax withholding methods to be used in conjunction with the new W-4. Publication 15T will contain new employer steps to figure out federal income tax withholding for when their employees give them the W-4. The calculation of withholding for Form W-4 submitted prior to 2020, again, as Andy had stated, that's going to be unchanged. So if you already have a W-4 on file, you're not required to make a change. So you can still keep that methodology for your withholding. And what Publication 15T is going to do, it's going to explain for employers on how they can calculate withholding for both individuals using a prior to 2020 W-4 and those using the new 2020 W-4. So with that, I will turn it back over to Andy.
Thanks, Bill. In addition to the W-4, there's just a couple other things that we've been keeping an eye on that we wanted to share with you from a federal perspective. You see this in the news all the time, tax fraud. The IRS obviously is well aware of this, and they're trying to do something about it. There are some programs they're putting out there just to try and combat this. Just wanted to mention a few things. The first one is actually pretty new, just came out in July. The IRS released regulations which will allow for the truncation of the employee's Social Security number on copies of the Form W-2. Now, this rule is only valid for W-2s that are going to be furnished to the employee. Anything that's going to the Social Security number, anything that is going to the Social Security Administration still has to have the full W-2 on it. It cannot be truncated. But anything that is given to the employees, they created, it's called a truncated taxpayer identification number, or a TTIN, which basically is the first 5 digits of the Social Security number are replaced by asterisks or X's, and then you just leave the other 4 numbers as they were. The purpose of this, twofold. This is bring it in line more with the 1099s. Currently, those you can truncate on, so this brings the W-2 in line with that as well. And the other thing is just security. And just to give you an example, anyone who gets their W-2s mailed to them could fall off the mail truck. Somebody could go in your mailbox and steal it. If your Social Security number is not truncated, then they have your name and your Social Security number and can do whatever fraudulent things they want with it. So with this truncation, it's hoped that it will improve security. So if, like I said, if your W-2 fell off the mail truck or somebody pulled it out of the mailbox, they're not going to be able to do much with it because they're not going to know what your Social Security number is because it is going to be truncated. So in addition to Fed, we're also monitoring what the states are going to do. Now that the Fed has this regulation out there, we are watching all the states to see if they are going to mimic what IRS does or if they're going to come up with something on their own. It's going to be up to each individual state at their own discretion if they want to pursue this or not. It is something we'll be watching. And it's gotten mixed reviews. We've discussed this in industry groups, and also there was a comment period on this, and there was a lot of mixed reviews, whether it was good or bad. Obviously, as I mentioned, it provides a greater level of security, so that's good. Others were concerned that it would be harder for an employee to verify their information was correct. If for some reason the truncated number was wrong, the employee wouldn't know that because it is truncated. So it bears watching. Like I said, this just came out, so it is possible they can modify it down the road. We will be watching it, but as of right now, those are the regulations, and they were finalized in July. So beginning, I don't think I mentioned this before, beginning December 31st, 2020 is when this will go into effect, and you can start truncating on the W-2s. One other thing that you may not have noticed, because it was a small byline in a very large law, the Taxpayer First Act, which was signed into law July 2019, one of the components of this was the electronic filing threshold for W-2s and 1099s was lowered, or is about to be lowered. The current level, if you're filing 250 or more W-2s or 1099s, those must be filed electronically. The law will incrementally lower this threshold beginning in 2021. It's going to lower it down to 100. And in the end, when it goes down to 10 in 2023. So it's part of an effort by IRS. Obviously, IRS likes it when everyone files electronically because it's less work on their end, it's easier, it's more secure. So that's the purpose of this, is just to get more people filing electronically. It gets out quicker and it helps reduce incidences of tax fraud. And then the one last thing I want to mention is the W-2 verification code. This is a fraud tool. IRS piloted it with several payroll companies a few years ago. If you're not familiar with it, it was in box 9 on your W-2. That changed this year, but in the past it was labeled verification code, and it was a 16-digit code, which when you filled out your 1040 return, if you did it electronically, there was a spot in the software program, which would allow you to enter this code. The whole purpose of it is IRS provided payroll companies with some sort of algorithm. I am not a math genius, so I won't even try and explain it, but they provided us with an algorithm which would allow us to calculate a code on all of the W-2s we sent to all of our clients' employees. The employees, when they got this W-2, when they went to file their taxes, would enter in the verification code. When IRS got the returns, they could see that verification code. They would check it, and then they would know that the return was genuine, the information came from the correct person, and it wasn't fraudulent, and then they could go right ahead and process it. Had pretty good results with it so far as being able to verify. IRS wasn't able to give us concrete numbers as to how successful in preventing fraud it was, but it was successful enough that it continued for a number of years. We are still waiting to see if it is going to be continuing for this year. If you've looked at the W-2, the box was removed from there. However, IRS has told us nothing has been decided yet. It's still with the higher ups there, and they're trying to make a decision if they're going to continue this going forward. So we are waiting for further clarification, and so more to come on that one. Hopefully it'll continue. I mean, any tool to prevent fraud is a good one. So hopefully we'll get more on that in the future and pass that along. And thanks everyone for coming. We want to open it up. Jen, have we gotten any questions in?
We've seen a couple questions come through on the Facebook live stream, just specifically asking what part of the forum you were discussing, but no content questions. So if you have questions at this point and you want to, if you're logged into the Zoom webinar, you can go ahead and type them right into the question box. Or if you're watching via live stream on Facebook, you can type them right into the comments and we'll see those. So we'll leave that open for a couple of minutes. If you have questions that you think of afterwards, or if you are watching this on the recorded version, you can still comment on the Facebook live stream and we can respond to you and let you know what the answer is to the question that you have.
Or if they want to email a question, Jen, who should they email?
If they just put it right into the live stream, into the recorded version on Facebook, we can contact them through there. And if they need to talk through it with a Paychex representative, we have reps all over the country, so we'll get them in touch with their local representative to make sure that they have somebody that they can sit down with and talk to about their questions.
Got it.
But yeah, if they just put their question right into that comment box, we can get them to the right person. I don't see any popping up, so I think we can wrap for today. Albert, thank you for having us. We're always happy to present to the LCPA members, and hopefully, we'd love to hear what ideas you guys have for future topics as well. So definitely share that with us in the comments too.
Yeah, no, this was a great topic. People are interested, and thank you, Jen, Andrew, Bill, for taking your time to teach us something.
Thanks for having us.
Thank you.
Thank you.
And thank you everybody for watching.